Okay, so I've received this on a free portfolio review questionnaire that I issue to people, and this is what somebody has sent me in. And you can have a free portfolio review. Just go to alpeshpatel.com/links. Anyway, this has come in from one of those people. And he said the major investment problem he's facing is lack of growth. Well, given that the NASDAQ's up 46% this year and the S&P 500 nearly 20%, it begs the question, how are you getting a lack of growth? Given that I'm only even comparing you to the indices, not trying to outperform the indices, which you should be able to do with a bit of cherry picking. So this individual is invested in, is often the case, total return growth fund. Now, total return sounds clever because it's meant to be that even if the market's down, you're up. Well, given that fund managers are not allowed to go into cash, I'd like to see how they pull off that little trick. So basically, total return is, by a fund manager, misadvertising. Okay, it's false marketing. And then balanced risk or growth fund. Balanced risk usually means guaranteed to underperform any index because you want less volatility. And essentially, it'll be no better than a bank account, oftentimes worse. Growth fund means we'll put it in some higher risk stocks in the hope they'll come good. The problem is both of these funds will have between 50 to 100 stocks in them. Look it up. You can go to their websites, look it up. There are 50 to 100. So if they do happen to have a Microsoft and Amazon, Apple, Tesla, you know, some of the stocks which have done rather well, it'll probably be about 1% of their portfolio, maybe 2%, maybe in some instances 3%. But they certainly won't be able to put more than that in because it'll be spread across 100 stocks. And if they do have, say, a massive 7% in one of such stocks, all the rest will have to compensate for it by having commensurately less capital in them. So, of course, why have you underperformed? I've just told you. It's very simple. What's the answer? Well, you could manage your own SIPP and ISA, and I'd suggest that's probably the way to go. Learn a little bit about how to buy a stock in a SIPP or ISA so it's tax-free growth and you're not paying a middleman. There's your starting point. People don't even know the mechanics of that. And then learn, well, how do you pick those stocks? And my approach, I've put on other videos on how best to do it. So I can explain that elsewhere. Thank you very much.